I don't know about you guys, but I'm super pumped for today because, in my opinion, now the fun is actually beginning. We have companies like Microsoft, Alphabet, Snapchat, Visa, Spotify, all reporting earnings after the bell. And of course, later on this week, we have other companies that we're going to break down, massive companies. And we had GM report earnings this morning, which we're going to talk about in the beginning of this video. So yeah, let's just dive into it, guys. We have a lot to get into. If y'all find value, hit that like button and make sure to subscribe. We're almost at 30,000 subs, guys, and I think we could get there by the end of July, maybe. And by the way, it's completely free to subscribe, so do that. And with that being said, I would give you a cheers, guys, but I didn't make my coffee yet, actually. It's about 8:30 a.m. or 8:45 when I'm making this video, and I didn't make my coffee yet. I'll probably make it in about a half hour. But yeah, let's dive into the stocks that I'm looking at that are, all reporting earnings pretty much today. Yeah, all these are reporting earnings today, and we'll break down the markets very quickly as it is pre-market right now, and we do have about 45 minutes left until open. Let me see what's going on here with the futures. It looks like we have the S&P futures up a whopping 1.5 points, pretty much at break even, guys, not doing much. We have the NASDAQ futures up a little bit more than that, up around 0.3%, not bad. As we have the Dow futures pretty flat, and the Russell's actually down about 3 points right now, nothing crazy, down barely anything, pretty much at break even. So yeah, guys, nothing much is going on. Honestly, not even worth me breaking it down. We're pretty flat right now as we are heading into the open. But let me tell you guys, this is probably the calm before the storm. There's a lot, like I said, of companies reporting earnings. And this morning we had GM. Let me pull it up and show you all. They reported and they ended up doing, let me see here, guys. They did $1.83, it looks like, in EPS. But that, or actually, no, $1.90, $1.91, yeah. $1.91, excuse me, guys, versus the $1.85. So that beat, and sales also beat by a nice margin, over $2 billion. $44.75 billion is what they came in at versus the $42.64 billion expected. So double beat for General Motors, and it looks like here they see full year 23 adjusted automotive free cash flow of $7 to $9 billion, up from the prior outlook of $5.5 to $7.5 billion. Wow, that's actually a big jump there in guidance. I'm loving that. And let me see here, guys. It looks like General Motors prior 2023 guidance for net income was around $8.4 to $9.9 billion. What's it now? It looks like they now see it at around 9.3 to 10.7. So they're raising guidance, guys, for cash flow, for net income. They beat EPS, beat revenue. Not bad, not bad. And it looks like here the stock is selling off. Let me see. We hit about 41 bucks. It looks like in the pre-market. That was about 2.5 hours ago. And now we're at 39. Where are we? 39.40. So yeah, we're down 2.7% since that high, which really is not that much. I mean, that's not that big of a deal. And on the 4-hour chart, if I pull this up, we're actually holding above the 180 SMA still, and we are holding an uptrend, at least as of now. Keyword is now. We don't know exactly how this will play out, but this is what I'm looking at right now, guys. It's pretty much holding the uptrend at about 8:45 a.m. when I'm making this video. And when you're watching this video, it might be different because I'm uploading this video probably about an hour and a half into the session. I don't know when it's going to go live, guys. But yeah, GM, that's what it's looking like right now. And of course, after the bell, let's break down some of these stocks that you must be watching. I'm watching as well. I actually own, the second one we're going to talk about is my biggest individual stock holding, which you guys probably know what stock that is. Let me know in the comments. You all probably know what I'm talking about. So Microsoft is after the bell, and it looks like here we are getting a little bit of hype in the pre-market. You guys can see Microsoft closed at 345 yesterday, and notice now it's pushing above 348 in the pre-market. So we're up already about 1% heading into open, and the numbers did not obviously come out yet. They're coming out after the bell. So there's a lot of anticipation, and Microsoft is heading into these earnings down, not a lot. I mean, it's not down a ton. I'm not going to sugarcoat it or BS you guys and be like, oh, it's down 40%. It's obviously not down that much. But it was down around, let me see here, 7%, which is a decent chunk for a company the size of Microsoft. It's down 7% heading into earnings. We're still holding the uptrend. We're right by the 180 SMA. Now I'm looking to see maybe we get some pop. Maybe if earnings or maybe we get a pop if the earnings are stronger than expected or not. We'll see. I don't know. But they're looking to do EPS of $2.55 versus last year's $2.23, so that's great. And revenue's looking to come in at $55.47 billion versus last year's $51.87 billion, which is great growth, about 7% year over year. So watch out for this one in the mid 300s. 350 is a big spot for Microsoft, no doubt about it. And Alphabet, which you guys probably knew, is my biggest individual stock holding. This, if I pull this channel tool up, is heading into earnings, pretty flat. I mean, this thing's been sideways, or actually arguably in a little downtrend. Yeah, a little downtrending channel since the end of May. So we're talking about 2 months now. We've been moving down here. So we have earnings after the bell today. They're looking to do EPS of $1.34 versus last year's $1.21. So that's good. They're going to be doing, higher EPS. They're growing their EPS. That's awesome. And revenue, $72.78 billion versus $69.69 billion from last year. That's up around 4.5% for Alphabet, which is solid. And mind you guys, the comparables when it comes to revenue for Alphabet and a lot of these big tech stocks, they're very difficult. So the fact that Microsoft is growing projected, right? Same with Alphabet. They're most likely to grow around 4 or 5% revenue. That's really good. That's pretty good if you ask me. I don't know. I mean, these companies are massive. You have to realize how big these companies are, and you guys know that. I mean, that's nothing new. So Alphabet is in this channel. Let's see what it's going to do post earnings. I'm super pumped about it. Snapchat is another one that I'm looking at. Definitely on the more risky side, but it is heading into earnings down a good chunk, about $1, which for Snap, $13, $14 stock, or $12 stock rather. That's almost a 10% down move. And now it looks like it is down a little bit, a teeny tiny bit in the pre-market. Nothing crazy though. But we'll see. I mean, this is one that's very volatile around earnings season. You all know that. I mean, look, last time they reported, the stock tanked like crazy. Before that, it ran up like crazy. Actually, no, wait. The earnings before last, it looks like we had a crazy V-shaped recovery. So look, we reported earnings, the stock tanked. The next day and the day after that, it had a crazy recovery, and it actually continued for a couple more days after that. So Snapchat is, the definition of completely unpredictable around earnings. I mean, that's why I don't touch stocks during earnings for short-term trades. You all know that, or maybe you don't know that. I'm telling you now if you've never heard me say that. So Snapchat, yeah, keeping my eyes on it after the bell. They're looking to do EPS of -4 cents. Last year they lost 2 cents, so the loss is widening, and revenue's looking to come in at $1.05 billion versus last year's $1.11 billion. So that's going to be declining as well. Revenue is going to be down 4 or 5%, something in that ballpark. So we also have Visa, guys, which is a big one today. And this is one that's breaking out of this ascending triangle that we called out a couple of weeks ago. You all probably remember that. We called this out on this stock and MasterCard, which, let's be honest, they move pretty much identically. They're identical, if that's, is identically a word? Yeah, that is a word, right? I hope it is a word. I don't know. Let me know in the comments, guys. But look, MasterCard, same thing. It's playing out. The triangles, playing out beautifully, which is a bullish pattern, and we're seeing that on Visa. So I guess we could group both of these. I mean, they're both reporting earnings very soon. Visa's today. I think MasterCard is on Thursday. Let me double check that to give you guys correct information. Yeah, Thursday morning we have MasterCard. So when it comes to Visa's numbers, they're looking to do EPS of $2.11. Last year they did $1.98, so that's growing pretty good. And revenue is looking to come in at $8.06 billion versus what? 7.28? Yeah, 7.28 from last year. That's up around 11% year over year. Not bad. And Spotify, which is the next one, we might as well dive into that one right now. They're looking to do EPS of -70 cents versus the -84 cents last year. So that, actually, wait a second. They already reported. Hold on a second, guys. I completely forgot Spotify reports in the morning. Or did they report yesterday? Wait a second. They must have switched earnings on me, or maybe I just had the wrong date. I thought they were going to report today. I guess not. Maybe they reported. Either way, let's see. It looks like the numbers came out and the stock is down a good chunk. Oh my goodness. So it closed at 165. Now it's at 144. So let me see. And mind you, this company is based out of Sweden, right? It's Sweden, I believe. Let me see. They ended up doing, or is it? It's not Switzerland, is it? No, it's Sweden. I'll double check that. Correct me in the comments, guys, please. Let's see. They ended up doing revenue of 3.177 billion, up 11% year over year. Total monthly active users 551 million, up 27% year over year. That's pretty dang impressive, if you ask me. Let me see EPS. Where's the EPS? They lost about $1.55 or 1.55 in euros, excuse me. So not the best sign. Obviously, they're losing money, and the stock is not liking this. I would think monthly active users of 27% is great, but of course, it's selling off on some other news or something we're not seeing. And we can see this stock, even though it's selling off, guys, guess what? It is still holding an uptrend on the 4-hour time frame. We're right above the 180 SMA. You guys can see that, which is great. So let's see. Let's be patient, but let's see if buyers do come and, start nibbling this thing up. I don't know. We'll see. Maybe buying it up a little bit in the mid-hundreds. Time will tell. And the last stock for the video, guys, which if you stuck till the end, hit that like button. Make sure to subscribe if you haven't done so already. But odds are, if you did stick till the end, you're probably subscribed already. But if you're not, hit that subscribe button. We're almost at 30,000 subs, guys, which is a huge milestone. After that, we're going for 50, then 100K. We can do it. Let's do it. I appreciate you all as always. So look, the last one is Teledoc, which is set to report after the bell. And this one does not look that bullish based on the overarching descending triangle on the 4-hour chart. You guys see that. We have support at 2250. We've held that for months on end. But at the same time, we have lower highs being made into that support, right? You guys see these lower highs being made, which makes this a textbook descending triangle, right? So if this were to play out, we fall through 22, it's going to be slipping down even further. And this stock is, I'm not going to say, it sells off every time they report earnings, but let's just say it's like a 50-50 coin toss. I mean, this thing is super volatile. It's in that same category as Snapchat around earnings, and it's just one that just cannot be trusted for a trade through earnings. So for that reason, like with all these stocks, I'm waiting till after earnings, and we'll see what these numbers end up looking like. But for now, we have the estimates. Estimate EPS, or EPS estimate, is negative 41 cents versus negative $19.22 last year. I'm not sure what they're doing there with the EPS numbers, how they're playing with that. I mean, you guys know those could be not doctored like they're cooking the books or anything, but we're not going to get into that in this video. And I don't track Teledoc at all, to be honest, so I'm not sure, what quarters they lose the most in or this or that. But it looks like they lost a ton last year. And when it comes to revenue, last year they did 592 million, and now they're looking to do about 649 million. So that will be up around 10%. Not bad. But still, the fact that we have this descending triangle makes me very nervous when it comes to Teledoc, and I'm staying away from it, to be honest, guys. But I will be watching it because, again, earnings are coming out today after the bell. So what do you all think? Let me know your thoughts down below in the comments. And don't forget to get your free money from Moomoo, the sponsor of today's video, up to 16 stocks, each up to $2,000. Simply use that link down below or go to stocksurfest.com/Moomoo. And listen to this, guys. Once you open up your account and fund it with at least $100, you get 5 stocks right off the bat. And if you fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks. And listen to this, the best part of the promo: fund your account with at least $5,000 on top of those 15 stocks. Guess what? You also get a free share of either Expedia stock or Tesla stock, which Tesla now is in the mid 200s, and Expedia stock's about $120. So yeah, guys, that promo is a no-brainer. Check out the Moomoo link down below. And of course, that is a sponsored link that does help out the channel. It's an affiliate link, technically. Either way, it's a sponsor, guys. I appreciate you all as always. And with that being said, I'll catch you in the next video.